Hello, everybody. Welcome back to the monthly market update with Mark Panazon, mortgage broker and partner with Mortgage Connection. Hope you're doing well. Let's start with the charts. Let's start with the Canada 5-year bond yield and the Canada overnight lending rate. Finally, we have a rate cut. That's right, folks. Last month or I guess 2 months ago in May, we had a rate drop. No, I'm wrong again. June 5th, we had a rate drop of 0.25%, highly predicted and projected to get that cut finally after no movement since July of last year. So almost exactly 1 year later, we finally get that rate cut, and we're moving towards more softer monetary policy, which is a great sign because everybody's hurting, everyone's looking for those cuts. So if you remember from a couple months ago, we saw this fixed rate trend line begin here. We saw fixed rates actually peak right around September of last year. Really nice move down to the end of the year. And then we've had this new trend line moving up. And then with this great news here, coinciding with a further rate drop here in the fixed rates. And as you know, and if you've been following this channel for a while, I've said this many times that rates generally follow the same trend. So right now there's certainly quite the margin between variable rates and fixed rates, but we've seen a great move down. We've seen a big move down on the fixed rates. It rebounded, but it's now come back down again. It's forming this nice little wedge pattern here. So I suspect with the next Bank of Canada meeting happening in about 2 weeks, and I'm projecting another rate cut happening, we're going to break out of this wedge, remain below the 200-day moving average, and continue to move down into more, again, softer monetary policy. So if we look at the Bank of Canada's projections here, you can see that they were projecting for the rate cut in June, here 4.75. So we got that quarter. They are projecting for another cut in July, another one in October and December. So we have 1% on the table for the back half of this year, and then we have another 1% on the table for next year rate cuts. So if that comes true, we should certainly see this overnight rate closer to 2.75, which would be somewhere in here by the end of 2025, something like a move down there. And fixed rates will certainly follow. What will be interesting to see if they follow this spread of variable rates being higher, or if we return to more of a normal spread that variable rates are typically lower than fixed rates. And I'll just illustrate that here with the weekly chart. So if you take a look since 1970-ish, the red line and or variable has generally been lower than fixed, and we've inverted here. So it'll be interesting to see if we go back to that previous pattern. I suspect we will, as this was certainly a black swan event here with COVID. So why would it not return to normal? But we'll have to see. Next up, we have the interest rates. So what are we seeing here? So overall, the lowest interest rates are around that 4.5% range, which is great. We were kind of in that high 4s to low 5s for a long time. The 5.5 here is a 5-year fixed. This one is actually a 6-month fixed. If you take a look at some of these shorter terms, still a little high in that 6.5% range all the way to 7.5. The 2-year rates are around the same, a little bit better, 5.5, 5.6 to 7.3. And the 3-year has been that sweet, soft number that a lot of folks are taking advantage of. ATB's obviously been really aggressive here in Alberta, so 4.8 all the way up to 5.8. I'll take a look at the 5 as well. So that's where you get that 4.5%, 4.6s, 4.7s, 4.8s. The bank's kind of at the bottom, 4.9 and 5. So certainly some good opportunities there. And then we have our variable rates, which are now a little bit more appealing. We have them at 5.9, and some lenders are at 5.95. A lot of them at 6%, which is effectively your prime minus 1, prime minus 0.9%. So starting to be really interesting, and I'm sure as these rate cuts continue, especially towards the end of the year, I have a feeling that more people are going to jump on the bandwagon of the variable rates, which we really haven't seen for a couple years since this period down here. So rates are certainly improving, and we're making our way back into those 4s and hope to be in the low 4s, 3.5% range, which was sort of the pre-COVID rates by the end of next year. That would be hopefully a good guess. What else is going on? Well, we got to look at the population. So Population has been just growing like crazy. We're now at 40 million as of last year. Basically brought in 1 million people from the previous year, which is wild. So population continues to grow. And how is that impacting everything? Well, if you look at housing starts, we are still not building enough homes. The Liberal government promised 500,000 homes per year. This very lofty projection. Well, in May, half of that. Month before, half of that. So we're still not building enough homes. Granted, it was a tick up from the previous month, but we need way more done. If you look at the building permits, it's kind of the same thing. We're not getting enough permits. This chart should be just flying up so we can get more homes built faster. And then the average home prices kind of just been sort of flat, right? So we sort of peaked here after this big COVID rush of people moving in, a lot of people coming to the country, a lot of immigration, less homes being built, really low interest rates just fueled it. We've tailed off a little bit, so not a ton of movement. And then really kind of just putting it all together, if we look at the comparison of the housing price index and the housing starts. So housing starts is how many homes we're building. Obviously, it's basically been flat since 1980. We're not building any more homes. We know the population is growing like crazy, yet the house price average house price or house price index just continues to increase. So this is a massive problem in Canada. We need to build more homes. It starts with less immigration and more homes being built, permits being issued faster, and so we can get this under control. So hopefully the prices come down. Now, I also wanted to touch on unemployment. So unemployment is a key metric which the Bank of Canada looks at to determine if we're going to increase rates or not. And that number just keeps increasing. We're at 6.4 as of last month, up 0.2 from 6.2. So we're trending up, which is good in terms of the Bank of Canada lowering rates, but obviously we don't want to see a lot of Canadians unemployed. So I think this is even more evidence that the Bank of Canada will cut rates next month. Now, when are they going to cut them? Well, the next meeting is July 24th, and we have a meeting in September, October, December. We've already cut in June here, so that's great news. I think a lot of people are projecting 2 rate cuts based on some of the noise on Twitter/X. So I think 2 or 3 cuts sounds pretty fair, but again, it sort of depends on this data. If unemployment just keeps increasing, I don't know why the bank would hold back any further rate cuts to kind of get us in line, especially because sales have been down as well, which is sort of the last slide I want to show. So if you look at the total sales for let's start with Calgary here. So for Calgary, sales have been down 11%, pretty much in all categories here. You can see new listings down as well. The average price keeps going up. So 605,000 is the average price in Calgary. So Calgary certainly has received the bulk of immigration, I think, in Alberta, or immigration. In Edmonton, it's a little softer. So our sales are way up year over year for total sales. However, listings aren't up, so people aren't selling their homes. So this is also what's bubbling the price up here. You can see the price has been up in all categories here, 6%, 8%, 10%, 12%. No one's selling their homes, so we're just purely relying on folks, or on home builders building homes, and we already know we're not building enough homes. So inventory is better from 2 months ago. We were 1 month inventory in May, I think it was, and now we're at 2 months. So it seems like the home builders are doing their job a little bit, but 2 months certainly isn't enough. I think for a balanced market, any realtor will say is around 3 months of inventory. So certainly not building enough homes, and the price is just continuing to increase. Certainly here in Edmonton, which is one of the softer markets, and I'm sure in BC and Ontario and other markets, it's even worse. So lots going on. If you have any questions about your specific situation, let me know. Otherwise, hope you enjoyed this information, and we'll see you next month.